Tom, if you can disable your screen share for a second.
Okay.
There we go. All right, everyone. Thank you so much for joining in today. Thank you for taking time on this Sunday to join us to learn a little more about our strategy tester in TrendSpider, and also learn a little bit how Tom, our partner at with TrendSpider and a very veteran trader and back tester, and how he uses TrendSpider. So we're excited to tell you guys more about that today. Just a quick disclaimer, as we always do, none of this is advice to buy or sell anything. We are really just illustrating the various features on the platform and showing how you can utilize those different features. So I just want to let everyone know that up front. And for those that have not learned or seen anything about TrendSpider before, our vision is one thing and one thing only, and that's to innovate how charting is done and to make the whole process of technical analysis and charting out different financial prices of different securities more efficiently. So that is really what we aim to do, both for the retail and professional side. And you know, you'll see on the platform we do have a ton of very unique features to TrendSpider, and we're actually working on adding more features on the roadmap, and we'll go over that as well. A few problems that we aim to solve. You know, there's different parts of the platform, so each section or each kind of feature is going to aim to solve a different problem. But with the automation side of things, we really try to make the whole process of technical analysis more efficient and remove some biases and curve fitting that may go on when you're drawing on the chart. If you have a position and you're really attached to that position, it's easy to draw the chart in a very biased way to your position, whether that's short, long, whatever. And that also helps with hand-drawn inconsistencies on the automated trendline drawing side of things. I personally use the trendline drawing feature as a secondary perspective to how I'm kind of looking at the chart. So I draw my own lines, and then I have the system kind of draw its own version of the lines based on whatever settings I'm using, and to see what those lines look like. And so, you know, that's how we can really utilize the automation side as far as trend lines, Fibonacci levels, that type of thing. But on the alert side and that type of thing, the fear of missing out, that's what we really aim to avoid. So it's very easy to get stuck in a stock because you chased it, because you just got emotional, you got bored, whatever the case is. Our alert system is really there to allow the market to come to you. And that's the same with you know, trend line alerts, but also multi-factor alerts, where you wait for a set of conditions to occur and then you decide if you want to make a move. So it's really about following your plan. So other things that we really try to kind of take out of the list of bad habits is impatience, chart fatigue. It's very easy to go through you know, 10 charts and draw each individual chart, and by, you know, 2 hours later you can barely see straight. And so we really want the system to kind of do some of the grunt work for you, but not replace it completely. We do all of these things through some of our main functions. Today's presentation is really going to be on the backtesting engine, which Tom will go over, and then I will go over it as well, more on the Raindrop side of things and how you can utilize the blue Raindrop and different tickers that are more responsive to the blue Raindrop. But we also have the automated technical analysis side of things, multi-time frame analysis, and I'll do an example of that last week, where we really found a bottom last week on a longer term time frame when we were looking at the daily chart. So pretty cool example of that. And as I mentioned, the alert system really helps you kind of let the market come to you instead of chasing. So before I hand it off to Tom real quick, just going to explain what a Raindrop is, because that's what I'll be focusing in on my side of things. So the Raindrop is something new for those that have not seen this before. It's a volume-based candle rather than an open and a close. You still have your high and your low, but instead of an open and close, you have a left side VWAP, which is the first half of the period, and then you have a right side VWAP, which is the second half of the period. And so you can see in this particular case, the color is green here because the right side VWAP is higher than the left. You can see here when the VWAP for the second half of the period is lower than the first half, that's when you have your red. And then the blue Raindrop, or what we just call the true doji, is essentially when both of these VWAPs, both of these bars equal each other, and you can see how it makes a cross similar to a regular doji. So going back here, just a few things that you can really decipher from this. You can essentially see that during the first half of the period, this volume profile shows that all of the volume was mostly focused at the bottom of the price range. As we went into the second half of the period, you can see here how the volume started to flow upwards and actually started to create new highs here. And we know that this second half action created new highs because there's no volume profile on the left side. We know that this action came from the second half of the period, and we know it was mostly buyers because it was pushing prices higher rather than dropping them. So, and we can see that too from the VWAP being higher as well than the first half. So this is the Raindrop. I will be going over it after Mr. Basso does his presentation, and I'm going to hand it off to him and let him introduce himself, and we'll go from there.
Okay, and I assume I can share my screen now.
Yep, I'll disable mine.
Okay. All right.
Alrighty, perfect.
All right, are you able to see my screen?
I can see it.
Okay. What I want to start with getting away from charting for a second, because what I'm going to be talking about is what I always call a buy-sell engine. And I always think that a complete trading strategy needs a buy-sell engine which creates action. It also needs position sizing. It needs portfolio selection and allocation. And last, and certainly not least, I would say most important, you have to have your mental side screwed on straight to be a good trader. If you don't know what you're doing, and you can't keep control of yourself and your emotions and all those things and be disciplined, I don't care what charting software you use. I don't care what kind of strategy you've developed. You won't be able to execute it, and because you as the human being will get in your own way. So all of this has to be there. The first part, that buy-sell engine, is critical to trying to create action. And the TrendSpider platform, to me, is an easy way to look at various buy-sell engines, test them out, and get a cursory look at, is this acting the way that I want it to act? Is it acting weird? How come we lost money during this period? You can do a lot of what ifs. You can try different parameters and try longer term, shorter term, and so on. So I thought what I'd do, I volunteered to try to do this live. We'll see how good I am at this. I just, as you can see in the upper left corner, MCD, that would be McDonald's. I just picked a stock just to pick a stock to show you how I do this. And down in the bottom here, you've got the ability to analyze various time periods. And what I like to do when I start is to look at shorter term time frames. And then if I like the way it acts, take a look at a deeper analysis and go into a lot more history. And as many of you know that have been following me on either Facebook or Twitter or wherever, I'm retired from the money management industry at this point. I have enjoytheride.world, which is a website dedicated to trading education, and I've done some seminars with people. I did one webinar, another one will probably be coming up here sometime in the near future. When I do trading, I want to do it no quicker than daily, to look at it once a day. And I usually try to get my work done inside of 30 minutes or less. Many days it's 15, 20 minutes because I like to go golf. I like to work in the garden. I like to go hiking and work out and do all sorts of different things. I don't like being in front of a computer all day. So some people will use this to be in front of it all day. And of course, then charting fatigue comes in. In my case, I want to use it to use the charts to analyze what my strategy is doing and make sure that the strategy I'm designing is actually able to pick up the types of action that I'm looking to pick up. So you can see on this graph, I've got McDonald's Corporation. You can see that, and we need to put some indicators in here, and we have none. And so what I thought I'd do is show you a couple of ones that I've used and how they would be to put them together. And one of them you see a lot is the Keltner Channel. And I tend to like 21 days. And it's not that 21 days is the best time frame. It means that 21 business days or trading days in a month is roughly a month. And anything less than a month, as a retirement guy and as a guy that doesn't want to trade very frequently at this point, I figure anything that's happening inside of a month is not worth worrying about too much. So that's why I select 21 days for my length. And for an ATR, which is average true range, says this indicator has that too, I like to match my volatility calculation to the length of my channel itself. Multiplier, 2, you can try different ones. I'm going to use 2 in this example. Now, to make it pictorially easy for me to see, what I like to do is create just a subtle background so I can see what's behind the chart. And I like to use, for up markets, I tend to think green is up and red is down. So I go over here to the low and I create a red color. So I've got an up color is green and a red for a down color. And the mid color, which is the moving average that's based on the 21 days, I just try to keep it white or something that's innocuously in the background. I don't want to see that middle line. I just want to see the action points. So I apply that, and there you have a Keltner channel. The thing I like about Keltners is you've got a middle line that's the average, and then 2 times the volatility to get to the high line, and 2 times the volatility from the moving average to get to the low line. And you can see just pictorially, just looking at this chart, there's places like in this area where my cursor is moving now, where it's a little bit wider because volatility was greater. And in other times when markets are kind of going sideways and are a little bit quiet, the lines get closer to each other. And in this way, Keltner channels are constantly optimizing themselves based on volatility. And I like that. It gives it more room for the market to move when the markets are volatile. It gives it less room to move when the markets are quiet. And I don't have to sit here and think about that. If I use something like a 100-day moving average, it's always going to be 100 days. It's always going to act the same way. And sometimes it seems to me, with high volatility, maybe 100 days is not enough and you need to give it more space. Other times when the markets are quiet, 100 may be too much and you need to have a more sensitive indicator. So I like Keltner's because it adjusts itself. Bollinger's another example. It does that. Then they do it with, that indicator will do it with standard deviations. So this is simple. I like the math. It fits me. I encourage everybody to look at the plethora of indicators that TrendSpider has provided you and find indicators that you understand and feel comfortable with yourself. You don't want to be trading like Tom. You want to be trading for you, according to strategies that you develop for yourself using a platform that works for you. So let's go on and start looking at this indicator, and let's try to do a little back testing just to see what we can do with it. And down at the bottom here is the strategy tester. And I've done a shallow look back of 2,000 days of data, or periods, which in my case is days. And I'm going to look at the close to do my test. So if I want to add a parameter or add a condition, parameter condition. So daily, I want to look at the price on the high. And if it's greater than one of the indicators, which in this case, let's do the high side of the Keltner channel, we want to buy it. We want to enter, as it says right over here. Now on the exit, we're going to do a long only to keep it simple. Price on the low is less than the indicator, and we'll use the low part of the Keltner channel. So now we have a way to get in and we have a way to get out. So all we got to do is hit this little test button and it grinds out and it gives us all sorts of statistics. And we can maximize this a little bit since we're in the process of trying to look at how this is working. And we see a number of things have just popped up. We have Price Behavior Explorer, and what this is useful for is to look at the average change of a specific trade on average. So you can see that after, well, let's see, right around in here, after 99 days, the average return was around 97, 99. It was 11.46% on that average trade. There's trades that made more than that. There's trades that made less than that. I'm sure there was losers in there. 21 positions were analyzed across 8 years of data. And the mean return was around 1.37 in this case. Now, let's talk about what's over here on the performance side. And we can see that there's two different parts of the graph here. You can see we went from 2012 to 2019. And you can also see that the strategy is in blue and McDonald's stock price is in the gray. So you can see both of these lines here, and you can see that the strategy itself was just holding its own, maybe on a little drawdown all the way through here, and now is perked up a little bit in most recent trading. This bottom graph, you can see these little blocks here. The thing I like about that is one of the ways that I try to test strategies is not just to run numbers and say, oh, I've made 1.37%, therefore it's profitable, therefore I go trade it. That's very minimal looking, and you're not really getting into the details of your trading strategy and understanding how it works. What I find very helpful is to move these brackets in and look at a period like maybe right in here where we've got some down period going. Notice that I've brought these into the point where I can study this down period here and try to understand why did this indicator do such a poor job perhaps of handling that particular time in history. Well, here you can see that now I've expanded, or I have contracted down to this particular period, the data on the strategy and the data on the prices. And I can even take a bigger look by just popping it like that. So now I'm sitting here looking at all the price action up and down, and I'm seeing how this indicator seemed to do during that time period. But this right down here that's grayed out that says positions, to me, that is a wonderful feature, because when I click on this, look what happens. The black you see is when we are in a position. So I can see that right during this period, we got into a position as the thing rallied all the way up to here, but that was the end of the run, and we immediately ended up getting stopped out over there, and we took a loss. So not surprisingly, we drew down the equity. Then we kind of go sideways because we aren't in a position. Notice that this is all light gray. Now we go to dark black again. That's in a position, and notice that it was another loser. We got in close to the high, out near the low. And all of that could bear further looking at if you wanted to get into the weeds on how your strategy is actually matching up day after day. But highly useful to go through and look at drawdowns like this and just see what kind of price action do we have in the stock and how did it react with your indicator. So that's what those are. Now what I'd like to do is show something else, something I like to see when I'm looking at a chart, and let's minimize this for a change. We got a lot of price action, and you might want to say, all right, I would like to see how the Keltners act and make sure that this worked the way that I think it should work. Well, okay, we ran the test already, and that's all done. But wouldn't it be helpful to see that on the chart? Perfect. TrendSpider just gives you your entry and exits, and you could say, okay, here I got an entry as it hit the top side of the Keltner band, which is perfect. And then you can see we went through the Keltner band on the downside here, and that gives you an exit. And it says on that particular trade you were down 4.2%. And then here's another entry as we hit the top side, This one's a profit. We go all the way up here before we get kicked out. We made 4.37 now. Now we got another entry here.
Wow.
And
still hasn't ended.
Hasn't ended. It's still there. So is the indicator doing what you expected it to do? Yes, it is, I guess, because every time it breaks the top line, we get in, and every time it breaks the bottom line, we get out, and that's what a Keltner channel does, and it's pictorially perfect. So if that's the way you would want to trade, you can actually get just a quick little look at this. Now that you know that it's acting correctly, you can then go down to this performance chart and dig in and look at all the positions and where you got in and out and explode up any one part of it just to continue to make sure that the indicator is doing the types of things in the timely fashion that you envisioned it when you first started looking at it as BuySell Engine. And the next thing I would usually do, if I like what I saw so far, and we'll go back to maximizing this so we can get down here, I would look at this 1.37 and I would say to myself, all right, well, I'm kind of happy with that for that particular stock. It's all right. You know, we're making money, and say I loved all of this and I like the way it picked up big moves like the most recent one, for instance. So then you can quickly just go to different periods. You can go to 3,000 and say, okay, 1.37 was 1.34 now. And then how about if we go all the way to 7,000? Oh, now we're up to 2.16. Must have had some moves way back when that really helped the cause a little bit. But all three periods showed some robustness and the ability to produce a profit. So that's all good and fine. And then we start thinking to ourselves, you know, I'm sitting here looking at this and I'm thinking, you know, what I don't like, Keltner can get into a situation where, and I don't have an example that I can point out too easily, I guess maybe right in this area, if we unmaximize it, you know, there's times when Keltners take a little while to catch up. If you have a big move, you know, this jumped up a lot right here, and look where the Keltner is. It's the stop loss that you're trailing is way, way, way far away, and it only starts getting closer over in this range where it finally kicks us out of the trade. Wouldn't it be nice to maybe pick up something a little quicker, maybe something that could pick up this sideways action and the resistance on the bottom side of it, and maybe get this stop loss a little bit higher up, and maybe we pick up a few profits? Well, one of my favorites over the years in that has been, let's go look at this, would be the Dungeons. Dungeon channels. Richard Dungeon was the guy that created it, and it's nothing more than a price look back over, in this case, 21 days. Why did I use 21? For the same reason I used it up there. No optimization, just doing it because it's about a month of trading days. Back color, I like to have a little back color, but not a lot. That's my personal preference. I like green for the upside. I like the middle color to just go away, and I like the low color to be red for sell. So now we have a second indicator and we can apply it. So now you can see the two indicators, and let's go ahead and get rid of all these entries and exits so you can just see the two things. And the price channels will be the ones that have the flat lines here, because what it's doing is looking back 21 periods, and if nothing's changed from this high over all of these periods, it's going to stay as the 21-day high, and therefore this top channel will be a flat line like that. But if we look at what's happened up in this period that I was pointing out before, where we had a bunch of sideways after a very fast run-up, the Keltners were struggling to keep up, but the 21-day Dungeon channel came up a little quicker and got all the way up to that kind of a stop-loss point, and actually would tend to trigger itself ahead of the Keltner. And we can test that by going down into our little testing module here. And let's create another indicator that is the Dungeon channel. So we want to look at the price. Let's look at the high being greater than the top side or the up part of the dungeon. And then let's add a way to get out. And that price there, we'll look at the low being less than the indicator on the low side of the dungeon channel. So now we've got two different indicators being used simultaneously. And again, we can, let's say, maximize this a little bit, and we can run a test, and we'll get a completely different set of statistics. Now we're at 1.7% over the 7,000 candles, still profitable. And if we look at that, see them on the chart, it's going to print it on the chart for us, so we can see, yes, there is entry and exit points. Let's look over here at that point that I was just using as an example a little while ago. The Keltner got very far below the action of the market, and so your risk per position would be very high. You might have to peel off some of the position because maybe the risk is too much for your portfolio to bear, I mean. And when it finally got executed, you were over in here. Well, look what happens when we have the dungeon channel added to it. Now we get a signal much earlier, and we've actually picked up 10% or almost 11% on the that same trade, where I think the other number was 4.8, if I remember, something like that. So you've improved that, the way that handled that situation. You may have created problems in other situations. And that's the point of the software, is to look at all these different periods and try to understand what kind of indicator do you have, and is this going to fit you and be easy for you to execute, because in the end, trading is execution and getting it done. You cannot just sit back and expect things to somehow happen that aren't going to push your button, and you've got to be willing to do it. Well, if it's visually easy to see and visually easy for you to understand, and have with these two indicators sort of covering each other and trying to help each other do the job that they're supposed to do, and if that works for you, then okay, then you get this all set up. You start applying it to a lot of different ticker symbols. We can just as easily take all this off and then put in, I don't know, Amazon. And there you go. You've got 7,000 days of data in there. You've got entry and exit points. It looks like it's doing what it's supposed to, because as soon as it went through this particular dungeon channel, it exited, which is appropriate. And as soon as it went through that point, you entered. Here's another one where you entered. We can easily change the indicators. So we can change the indicators here. And let's say we wanted to, I don't know, do something longer term even. So let's go to 30. Let's do 30. Whoop. And let's do 30 here. We can apply it, go down to our study, go up to 30, and go up to 30. And go up to 30 here. And then we got to go over here and do the same thing. So we have that to get out. Apply it. Go to the dungeon, make that 30. Apply it. We can get rid of all of these drawings, freshen up the chart, and then test it one more time. Boom. And a second later or so, you've got all your new points. Notice there's less points that are giving you signals because you are going to stay in the trades longer, because your indicators are 30 days now instead of 21. The lower the number, the more trades you'll get. The less the number, the less trades, or the higher the number of days, the less trades you're going to get. And I always recommend, if traders want to be successful, dial it in to suit you. Don't dial it in to suit me. I'm a retired guy that looks at it 15 minutes a day. You might be a day trader wanting to sit in front of the screen all day. I'm not you, you're not me. We shouldn't be trading the same way. It won't work. One of us is going to have a bad day. And to me, this is easy to take a look at and see how often you're trading. Let's say you travel 5 days a week and you only have time on the weekend. Well, maybe use weekly charts, because that's the only time on Saturday morning is the only time you can get together and get on your TrendSpider and do some work and decide what you want to do for the upcoming week. You make your trades Monday morning and off you go again on the road. If that's your life, well, then you have to design your trading strategy around your life. You can't trade, intraday if you're on an airplane. So it's very important to have the ability to look at your buy-sell engine and understand whether it's going to fit you. And to me, TrendSpider does a very reasonable job of giving you a tool that's even easy to use, and visually seeing what you're doing and making sure that you're finding something that fits you and works for you. And that probably is the way I use it the most. Now, Jake might offer some features that I maybe have not gone into. The number of positions is something I guess you could look at. Here's 204 days all the way out here, but there was only one trade that lasted that long. You can see that a lot of trades, maybe mean change is much less than that. So you get a lot of trades that start out that have only go for a few days. Very few trades make it all the way out to over 200 days.
One thing that I was going to mention, so if let's say that you did this back test and you really liked it, if you scroll down, there is a way that you can just create an alert. So it says, alert me next time this happens. So that's just an easy way to, let's say you do find a strategy that you really like and you want to know next time it happens. That's how you can do that.
Right. So I could say this could be, we could call it the Keltner/Dungeon. And then I could describe it, and it expires, let's say, over the next 14 days, and whenever it's triggered. And so we can create the alert, and now it's sitting there, and I'm going to get a message to my phone if I choose to set it up that way.
And you can see it right in the bottom right corner there. The Amazon alert popped up.
Yep.
So, yeah, no, I love it. It's so cool because I've never seen somebody use these types of channels like that. So it's such a cool way to look at the price action, and it's a really cool way to back test. I personally generally back test on the blue Raindrop, so that's one thing I was going to touch on. And it's interesting, and I'm sure this is very true for this strategy as well. I mean, you're going to have strategies that perform better on different stocks. Some stocks are more responsive than others to different setups and different conditions that occur. And so that's a really cool thing as well. You can easily just go through any different stock and it's going to give you the data for whatever stock you're looking at, and it will just automatically pull up. So it's definitely a way to make the whole process more efficient.
Yep. And here I'm just running one on the SPYs, the spiders. So there's your market index. Pretty easy to do. Put in a new ticker, boom. I use the spiders a lot for my hedging of my stock portfolio, and you can easily set up a strategy and put your hedges on against your long stock positions and help protect risk in down markets. Easy to do, easy to see. Painlessly easy to just put a ticker in and use your same indicator and go through a portfolio of 20 things if you want and see how each one reacts. See whether it looks like it's robust enough to work on the vast majority of the issues. So that's how you kind of get to something you feel comfortable with. And that's so much, very important in trading, in my opinion.
Awesome. Well, thank you so much for your input. I'm going to go ahead and share my screen real quick. you did an amazing job at kind of sharing how to use the back tester, but I just wanted to show everybody the blue raindrops and kind of different going over a couple charts and seeing how these blue raindrops can be slightly different. So for example, on SPY, you'll see here that there's not a ton of blue raindrops. They're very scarce. And so that's one thing right off the bat with blue raindrops that you'll see here is each chart is going to be very different. Some charts will literally print a blue raindrop every 5 candles to 10 candles, like crypto especially. For those that don't trade crypto, you know, it's not a big deal, but like you got to make sure that you're looking for these different charts that have a reaction to the blue raindrop. So blue raindrop is not a buy signal, it's not a sell signal. It's generally a volatility signal, especially on these higher liquid stocks, your Amazons, your Netflix. That's a great example as well. So we'll just go and do this one on SPY first. So the conditions, what Tom did, all I have to do is add parameter, condition, and instead of price, I'm going to go to candlestick pattern here, type in raindrop, and you can see here raindrop doji pops up. That's what we call the blue raindrop. And our exit conditions in this case, let's make it 3 candles. So that means after 3 candles have passed, what's the return after that? So if we go and test that out, we'll see that, you know, on SPY, the mean trade return is kind of insignificant. It's 0.26. And if we see all these on the chart, you'll see, you know, generally the move for SPY doesn't always happen in 3 candles. Notice here, you've got a blue raindrop, you've got an immediate move down. Almost 2% down on SPY in 3 days is a decent little drop. Here you can see the blue raindrop forms, and after 3 candles, we're only up 0.27%. However, we can see here that after 7 candles, you can see it was up almost 1.7%. So you can see some of these candles take a little longer to materialize, if you will, depending on whatever stock you're looking at. In this case, you can see we've got a blue raindrop, and within 3 candles, a 0.5% drop. However, we extend that a couple more days, and all of a sudden we're looking at a 4% drop over 11 trading days on the SPY. So that's relatively significant. And so that's definitely something to notice here, where it's definitely not a signal to do anything. It's a signal to start keeping in mind that there may be some type of big move coming. In a lot of cases, the move is not always known because if it's just in a random part of the price action, it may not necessarily be, very clear on which way it's going to go. Now, if we go to, let's say, XLF, for example, this is a cool case study on that. You'll see that, let me get rid of this little back test I ran. You'll see in this case, we had, I'll just kind of draw this wedge here. We kind of have this falling wedge looking kind of area here. And I actually drew that a little off, but here's your falling wedge resistance here. And you can see essentially whenever you've got a blue raindrop, and I didn't draw this trend line right, it's a little off, but you get the point where you've got a blue raindrop here on resistance. We connected this point to this point, extended it, we get a blue raindrop. Within 5 days, you can see here that we dropped from that candle. This is 1.44% in 3 days, but the actual total move down to the falling wedge support was almost 2%. And you can see here, after we broke down, found support, a blue raindrop formed on support, and then you had your move up. So this is an example, kind of a case study of a time where you actually could get a little more predictability from these raindrops, just simply based on where they were on the support or resistance. So that's just an example that you can do. This is kind of an example as well where we've got the blue raindrop, and we're not necessarily in a very, very easy to see pattern. It's very kind of like just random. And so you can see within a few, 5 candles, we didn't have a ton of movement. Within 10 candles, though, we had a relatively big move. So this is an example of XLF, which is another ETF, which kind of goes into the same theory as SPY, where XLF does have more of these blue raindrops than let's say SPY. But if we go to something like Netflix, you'll see that these happen pretty often. And every time that they do happen, you'll see that they're relatively significant in a very strong move one way or the other. So if we see this on the chart, you'll see here, not every time, but in this case, you've got a blue raindrop, 5% move up within 3 days. We can go and measure that over a longer period of time, and we can see, after 20 trading days, it was almost up 20%. We finally topped out with the blue raindrop and then dropped almost 4% within 3 trading days. So you can see here that there's some pretty big volatility in these moves. Blue raindrop, 10% move in 3 days. Blue raindrop, 7% move. When we were kind of chopping up from January to May, here you can see every time we had a blue raindrop, there was some type of slight move. In this case, we had a blue raindrop, move down. In this case, you can see it says 1.51%. So we're actually measuring this raindrop because this is the third raindrop. If you want to actually see the max drawdown here, you would have to go to download CSV, and you'll be able to see what the variation between the price was in between that entry and exit, because this is just telling us what the return was on the third day. In reality, this actually dropped more than that before that. So you can see here, we had our entry and our exits all the way at 2%. So the max drawdown was more than that. And that's something we will be adding to the chart as we continue to improve the back tester. But as you can see, every time you've got one of these, you've got, generally after a big move down, you've got a blue raindrop and a rip to the upside. You kind of consolidate up here, got a blue raindrop and a strong move down. So they are pretty fascinating. They really work a lot better on these bigger stocks. Another one that it works really well on is United Healthcare. So just some ideas for you guys to put on the watch list as far as different stocks that respond well to blue raindrops. These aren't stocks to watch or anything like that for buying or selling, but keep an eye on these because when these blue raindrops do form, it's generally something to watch. United Healthcare, you can see here, we topped out. Let me just see it on the chart. Your entries here within 3 days, a negative 1.41%. Let's change this to, let's say, 10 candles. Reset it, test it out. See it on the chart. And all of a sudden, you'll see entry, exit within 10 candles was 11%. We had a blue raindrop form 1 or 2 days after that, and we bottomed out and moved up over 7%. This says 6.37%, but remember, this is just measuring the return on that 10th day. It's not necessarily telling us that we did top out here around 8%. However, when you do download the CSV, which is just kind of a spreadsheet, it will tell you that information. So if that's information you need to know, just download the CSV and you'll be able to find it. One last one that I love to watch blue raindrops for is Amazon. Amazon and Netflix are both kind of the most volatile ones, if you will. You can see here that, very similar to Netflix, where we had a blue raindrop, had a move down, had another blue raindrop, and then absolutely just tanked. So it seems, the more liquid technology stocks are the ones that really have some type of correlation coefficient where there's some statistical, backing behind these moves. If it's a penny stock or crypto even, generally you're not going to see these types of moves that are as strong one way or the other. So that's something to keep in mind. But at the end of the day, this is just another tool to add to the toolbox. It's not an end-all be-all. It's just a new way to visualize volume and price action. And that's how it should kind of be used, just another way to get a secondary perspective. One thing that I really like about these raindrops is a lot of the time you'll see, this is an example on SPY, where you can see on Friday, we actually closed as a green raindrop. So if you guys remember at the beginning, we said that a green raindrop is when the VWAP for the second half of the period is higher than the first. But then if we split the screen and we go to the daily candle, you'll actually see that the daily candle was red. So, it's these types of discrepancies I sometimes look for. And so you can see here, we've got a green candle, but we've got a red candle here. This did happen here. I was watching this August 2nd. I think that was a Friday as well. And we had this green raindrop showing up, but then we had a red raindrop. And I was like, okay, this is something to keep in mind. It's not this is going to move up because of that, but it was something to kind of a discrepancy to take a look at. So that's another thing that I hope to get on the back tester, where you can say, back test anytime a green raindrop occurred, but it was a red candle, that type of thing. So what you see now is very much still a product in the process of being improved and refined and just being developed. We have a huge roadmap that I'll go over here. Essentially, this is our current roadmap, and you'll see that in the current quarter we have had a few big wins. So we've added a new global templates manager where you can create templates and then either back test those templates, or you can create these templates for later down the road when you are looking for specific setups. And you can also see the ones that we've created. These are just mostly generic ones, the SMA 20 across the 50 or something like that. So make sure to check out those templates. Just to show you guys where you can find that, you go to Tools, Templates Manager, and it's right here. And you can choose all those different things. And you can create your own as well. So that's really cool, and that's something we just added. You can also see here that this quarter we really hope to increase some of the backtesting statistics we have, as well as see more history. So for those that have been watching the screen, you'll see when I scroll back, we only go back 320 candles right now. And there's some logic behind that, because if we want to use the automated trend lines, which we have here, these trend lines just popped up based on the settings that we have on the back end. In order to keep this analysis consistent, we need to have a constant, and a constant time frame to go off of for each chart. And so we chose 320 candles. But as we show in the roadmap, we are looking to multiply that. So 640 candles, 960 candles. So you can look back further. And just to let you guys know, just because we can't look back further visually, that doesn't mean we don't have the data for the backtester. So you can see here, you can go back very far on the data. You can go up to 7,000 candles, as Tom mentioned. So that's definitely something we have coming and hoping to improve because we have had a lot of people ask for more data. Another thing that we really want to add in the coming quarters and into next year is the ability to scan. So for example, let's say, I can already create an alert. So if I backtest a blue raindrop and I want to be alerted next time a blue raindrop occurs, I just go to the backtester, alert me next time this happens, and do that. However, we don't have the ability to actually scan for those raindrops, see which stocks had a blue raindrop close for the day. That's really valuable information that we're hoping to get to you guys later this year. We're also hoping to get watch list alerts. So instead of going in and creating an individual alert and then saving that template and then adding that alert to another stock, you just create a watch list of stocks, create the conditions that you want the system to watch for, and anytime any of those conditions become true on any of the stocks in the watch list, you'll get an alert via phone or email. So we're really looking forward to that. Chart pattern recognition, so your bull flags, your wedges, your falling wedges, those types of things, we are hoping to implement that in the coming quarter as well as increase the price alert functionality. So really just improving everything we've already created and adding on to the platform as it is already. First half of 2020 is going to be more focused on data feeds, more complex pattern recognition, so your inverse head and shoulders, your head and shoulders, cup and handles, that types of thing. Getting more data on the back test, or even more data and more statistics. And then finally, to finish the entire process, so this can be your only one all-in-one platform you use for trading, we are going to have brokerage integration. So you can go ahead, create your alert. When your alert happens, you have the ability to make a trade if you want to go ahead with the conditions. So let's say the MACD's crossed, the RSI broke above 35. and the daily prices above the SMA. You'll get an alert on your phone. You'll be connected to your brokerage, and you'll be able to say, okay, I want to buy these shares. I want to buy X amount of shares. I want to short X amount of shares. Whatever the case is, you'll be able to do the whole process on our platform. So definitely a ton more things on the roadmap, and a few new innovative features that we have coming as well, such as the volume heat map, what we call like the limbo line heat map. Definitely look for that. That's looking more at volume profile, kind of a new way to look at volume profile, and really just innovating those types of things. And that's really all I have. Thank you guys so much for joining today. We had a great turnout. We sincerely appreciate your time on a Sunday, and thank you so much, Tom, for joining us and giving
it's my pleasure.
And your strategies that you look at, and your take on the markets. And if you guys are interested, you can use Basso 15 for 15% off for 12 months. We do have a free trial, so you guys don't need to jump in right away. You can try before you buy, give it a shot, test it out, and see if it's for you. There's certain traders that are going to find this useful, and then other traders who may not. And we just want to make sure that this is something that's valuable to you before you actually go in and buy it. So if you have any questions about the free trial, please feel free to reach out to us. And I'm going to look at the chats and see if we have any questions that are unanswered. Does Mr. Basso have a service? Tom has
no. I'm retired, but I do have a website that I put together that is a collection of just about everything I know about trading in one place. All my research papers over the 28 years I was in the business. I did a video series on how to create a trading strategy. I've got a book on there that's exclusively dedicated to position sizing and how to do that successfully and hopefully simply, including the formulas that I used to use when I was a money manager, and I still use today as a private investor. But no, I don't have a service. That would require that I'm not being retired, and I prefer to keep my days open.
I love it. Well, if there's no other questions, please feel free to reach out to us at hello@trendspider.com if you feel that you came up with a question after we logged off. But once again, just a big thank you to Tom for being a partner with TrendSpider, and also just using the platform and using some of your strategies on it. And if there's no other questions, I think we will head off. Well, thank you, everyone. Have a great Sunday. Thank you again, Tom. Have a great Sunday night. And we will be very active on social this week because we do have a chart contest. Make sure to check out our Twitters, just @TrendSpider. We are giving away a free TrendSpider account to the winner of the contest, and we have a few judges that you can check out on Twitter as well. So make sure to look for that, and we will see everyone at the next webinar if you'd like to listen in on the next one. Have a great night, and we'll talk to everyone soon.